Welcome everyone to Mundoro's presentation. Thank you to the Noble and Channel Group organizers for inviting us to present. We think we have a truly exciting copper and gold story, and I'll be taking about 15 to 20 minutes to walk you through the presentation, and I'm really looking forward to answering any questions. Just as a cautionary note, please take note of the forward-looking statements. So to start off with, we like to give investors an understanding of why Mundoro and why now. I think one of the really important themes in our industry today is the copper price and the copper market and the dynamics of that market, and the fact that there are very few explorers that really focus on this particular commodity. The second thing is we really do try and focus and create a land package around what we call world-class districts. I know it's a term that's used very often in our business, but what we classify as world-class is really a district that has infrastructure and a real means to get assets from exploration into production. And certainly we think that is the case today in the Timok region in eastern Serbia. We do partner our projects, so there's never a question of will Mundoro be able to finance its development. By having these assets partnered, we are actually in that very lucrative position where assets can advance based on the balance sheets of our senior partners. That allows us to actually generate revenue from our exploration activity on the ground right from the get-go, which is pretty unusual for exploration companies, and I'll certainly walk you through that as we get through the presentation. We always create a pipeline of projects. What we have is our core portfolio of projects that we like to partner out to senior partners, and then also replenish that portfolio with new and exciting projects that can be drill tested. And of course, the experience of the team we think is extremely important. The exploration business is a very difficult business, and having the right team in place that can not only manage it from a technical point of view, a scientific point of view, but also from a logistics point of view. So moving forward, we've got a portfolio that's really focused on Eastern Europe. We think that is a tremendously interesting opportunity for the industry. The Tethyan belt really runs from Eastern Europe right through down to Asia. And what you'll see here is that the majority of the mineral deposits that are currently either being evaluated or in production really exist in that western portion where from a jurisdictional point of view, it's the easiest to operate in. And that compares really nicely to example South America, specifically the Andes. You know, we all know in the business there's many exploration companies that are focused on Peru and Chile, for example, and Ecuador. And what we've come to see is that in Eastern Europe, you have a lot of very similar type of systems, these porphyry and epithermal systems, and yet you have the advantage of roads, infrastructure, smelters, ports, and of course, the human resources and the willingness of governments for foreign investment, which really make it a unique part of the world to get involved in to develop new assets. So we think that's a very great opportunity for investors because oftentimes in the Andes and in South America, it can be quite challenging to get the infrastructure in place to get assets moving forward. Now, one of the things that we like to highlight that our business model really focuses on generating the projects, bringing on board the partners, and those tend to be more senior partners, and then generating revenue from our portfolio right from the get-go. And I'll kind of work through how we do that throughout the course of the presentation. Now, the number one focus for us and our shareholders is to make a discovery and to monetize that discovery through attaining a royalty. So that's why we call it a little bit of that royalty generator model. It's different from a traditional royalty company who use their balance sheet to buy royalties. We don't actually buy royalties. What we do is we stake the ground, we create very attractive drill targets, we bring in partners who sole fund 100% of those programs. So our investors and our shareholders don't take on any capital risk and don't take on any dilution risk if those assets should not work out. And when they do work out, we retain the royalties. And then along the way, we actually generate this creative revenue model where we take upfront operator fees. We take upfront option payments. Once the partner has earned into the asset, those transform into advanced royalty payments. And then we also align ourselves with our partners through these milestone payments so that as there is a resource developed, we get a payment. As there is a permit put in place for those assets, we receive a payment, and of course, commercial production. And we think this is a really great way for investors to not just wait for that future royalty to pay out, but actually have revenue along the way. And that allows us to maintain dilution and to not have to go to the market on a regular basis. And when we do go back to the market, we go back for significantly smaller amounts than is traditionally needed in the exploration industry. So what does that look like? Over the last 4 or 5 years, we've been running this model, and you can see that the partner funding has been going up, and as well as our revenue. And I'll give you a sense of what that looks like in comparison to the industry. So we've been growing those exploration revenue dollars by about 56% over the last 3 years compared to a lot of our peers, which have been growing them at around 10%. Our G&A is one of the lowest in the industry, and we do that because specifically what we really focus on is generating assets and try and keep our corporate G&A down. And you can see that our spend is about 15% of the exploration dollars that go into the ground. So that's significantly attractive for our shareholders. And when you look at the industry, you can really get a sense of, there's obviously the seniors who are very established royalty companies, and they trade on very different dynamics. But when you look at the juniors, a lot of these groups that are in the marketplace with this particular model, they focus on different niches. Our niche is Eastern Europe with a copper focus. There is a very strong gold component in porphyry systems, so that's obviously a real advantage for our shareholders. And at the same time, we've got one of the better revenue generating portfolios, and we've been growing at a very fast rate. So our current cash position is about 1.9 million. Of course, we have no debt. We have 81 million shares outstanding, and fully diluted, that's about 95 million. What's unique about us is that we do have a pretty strong institutional holding. It's about 53% of the company, and 43% is retail. And so what you see in the stock in terms of liquidity on a day-to-day basis, it's really that 43% retail segment that's trading the stock. And that's why, we come out to these conferences in order to bring awareness to the company and give people an opportunity to be able to make the decision of whether they want to get involved with Mundoro. In terms of our institutional base, you can see some of our institutional shareholders here, and we do have coverage by what we think are some of the leading minds on the research side in terms of these types of opportunities. So our team is really a very technically focused team. Our chief geologist is Richard Gemelita. Our exploration manager is Yasin Khrushchev. He's been in the region for well over 20 years. We have administration managers in the districts where we work in order to ensure that our licenses are maintained in good standing. We have a board that's very hands-on, and each person has a specific role. And we think that this type of tight management and director structure really leverages the shareholders' ability in order to get minimum dilution in the company. So what are we focused on? We're focused on Eastern Europe, like we mentioned. In this part of the world, we were involved in Timok, which is what we call a world-class mining district. The next area as you move towards the southeast is the Panagorska district. It's also known for its porphyry and epithermal systems, and certainly for its copper and gold production. And as you move further down towards the southeast, you get into the Rhodops, which we call an emerging district. Now, I'm going to go through each of these in detail. And I think one of the important things to highlight, which is really interesting about Eastern Europe that I think a lot of people don't recognize, is that there's a really strong M&A component. We've seen a lot of corporate transactions of the majors buying out juniors in this space in order to build positions and get into assets. And I think that's a unique opportunity, that it's not just about exploration, but there's also really good M&A opportunities in the region. So our land package in the Timok district is really focused around the Timok central and southern portion. To the left, what you have is our joint venture with Geographic, which is the Japanese government. And then these brown colored licenses are our joint venture with Vale. And Vale is the world's third largest mining conglomerate. Now, what's attractive about this region is that it has about 4 billion tons of porphyries. And when you get into that scale and size over multiple projects, you really start to recognize that there is likely a very strong opportunity for further discoveries, but it takes a lot of systematic work and a lot of deep pockets in order to be able to do that systematic work, which is why we partner all of our projects. The next district that we focus on and that we think has, again, that potential is the Panagorishte district. Here, a well-known company that's in the Canadian marketplace is called Dundee Precious Metals. They own the Chelopech mine. They've done a remarkable job of demonstrating what international mining could be in this jurisdiction. And of course, there are also other open pit mines that are porphyry systems currently being mined out. So our area that we want to tender for is called the Svoboda region with the old Radka mine, and we think that that's an important opportunity for the district and for investors. Just to kind of dig into the details of the specific projects, what we're looking at here is the Timok region. What we're looking here is the center of where most of those porphyries have been discovered. So that's the Bor mining complex. Just northeast of that is the Veliki Kriveli mine. Just northwest of that is the Sarova mine, which is currently being put back into production. And then, of course, the famous Chukatopeki discovery, which really perked up a lot of attention back into this district in 2012. Now, our area that we're exploring with Geographic is here to the west, called the Borsko license. There, we've identified in Target 1 a really interesting lithocap that is intact in underground, about 500 meters at depth, which is very similar depth horizon to a lot of the other porphyry systems. And what we've been able to identify is that it has the showings of what we believe is a porphyry that's creating that lithocap. And so the next phase of exploration here will really to be drill deeper and look for that porphyry, and also look for those possible extensions into the high sulfidation zones. Now, porphyry exploration tends to happen in proximity to the main structure, so that 5 and 10 kilometer radius is actually an important kind of measuring stick. It's not, a hard, fast rule, but it does give you a sense of perhaps the increase in probability of another discovery. So that's something to take note of. In terms of the Vale JV program and the projects there, we've identified 5 new areas of exploration to basically drill test, ideally in 2021. We've already started drilling this year. So we've started with the Skoruza target area here. We announced that about a week and a half ago. And we think this is just an excellent example of how partnering with large companies who can take the approach of very systematic work is very beneficial to shareholders of the junior company, and this case being Mundoro. And of course, there's no dilution to Mundoro as part of this expenditure because Vale sole funds 100% of the program. The next thing to kind of talk about is a little bit more of the details of what we're actually going to be drill testing. And so what you see here is that we use a tool of geochemistry, geophysics, alteration analysis, structural analysis. We put all of that together in order to generate the targets and rank them. So today the drill rigs are here in the northeast portion of the upper portion of this ground mag anomaly. And then as we transition throughout the course of the year, we expect to get down to the Glavica area, which is again another geophysical target, which has also been mapped, and then down here in the Skoruza South area. What is important to identify is that when you're target testing, it's really great to have multiple targets, and so that increases your probability for another discovery. Here is another example in the southern part of the Timok licenses with Vale, where there's a really interesting soil geochem anomaly for Mali. Mali is indicative of being a pathfinder for porphyry systems, and the fact that this Mali anomaly clearly is demonstrating that it's moving towards and illustrating that it's extending towards the east, has created another valuable opportunity for target testing here in the Southern Oblast license. Now, as we move down up actually to the north end of the Timok region, there is a famous mine there called MUNMF. It's currently in production, and our area is just directly north of the MUNMF mine. So here in the lower left-hand side of the map, it's Google Earth image. You can see the mine, the pits, and the waste material. And then as you move towards the northeast, about 1.5 kilometers away, which is probably about a couple of city blocks in a typical city, you get into this porphyry system that Mundoro has discovered, as well as an intrusion, which we think has very similar characteristics and can definitely demonstrate some more meaningful resources in this part of the Timok region at the north end. I think it's important to highlight that, environmental, social, and governance is an extremely important part of our industry. I'm sure you've heard many companies talk about this. We've been following this approach for the last 20 years. The environmental side, it's extremely important that you leave ground conditions as you found them. That bodes well for communities, and I think it builds a level of trust between companies and communities. We always outreach to the local communities where we operate, and we like to support their initiatives with education and health. We think those are extremely valuable to everyone involved, to all stakeholders. And of course, governance, we always work in an extremely transparent environment. We believe that every jurisdiction that we work in has the rule of law, and I think that's a fundamental belief of most of the industry, is that we all like to operate in areas where there's great transparency. There's a wonderful report called the Fraser Institute that comes out every second year. And it's interesting how they rank globally jurisdictions in terms of mineral resources. And certainly Serbia has been very well ranked in Europe as one of the top 5. And I think that's a testament to the fact that the government has done quite a lot in order to attract foreign investment in the minerals sector. So the way that you can think about Mundoro is quality. We have tremendously valuable land package in a strategic location in a world-class mining district. We have fantastic partners that have deep pockets and the ability to advance assets into production. And we generate revenue from our portfolio right from the get-go, which is very unique. So not only do you have the optionality of an exploration discovery directly through the equity of our company, but also really stable revenue in order to ensure that dilution is maintained and controlled very effectively. And I think that's a unique proposition in our industry. So with that, I would love to hand it back and open it up for questions.
Thank you, Tio. I'm Mark Reichman, the Senior Research Analyst who covers the metals and mining sector for Noble Capital Markets. I want to remind our viewers that if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So the first question is what is the basis for your geographic focus, and will it ever broaden?
Oh, that's a fantastic question. I mean, let's go back to this slide here, which illustrates, right now the focus on the western portion of the Tethyan belt. Our focus, if you can think about it, is the porphyry and epithermal systems. Those are, if you're going to be in the copper and gold business and try and find meaningful size assets, this category of deposits is extremely important in our industry. So it's not so much of a geographical focus as it is a type of deposit focus. And so we are prepared to go anywhere in the world that leverages our experience in working with these kind of systems. So today we're focused on Eastern Europe because we think that was a tremendously unique opportunity to be able to build a land package like that around a district that had been mining for 100 years. We have always been searching globally for these kind of opportunities, and we balance that with, what is the rule of law in those jurisdictions, and what's the mineral tenure rights, and how can companies advance assets from exploration into development. So those are our kind of check boxes.
So to kind of follow up on that question, it's really partially based on kind of the team that you've assembled. In other words, the core competencies that your technical advisory teams bring to the table. So it's not necessarily geographic focus, as you mentioned. It is also the geological systems and the natures of different types of deposits. So what other districts would you be entertaining, or do you think you'll be focused here in Europe for a while?
Well, as you know, one of the things that you'll see on this graphic here is we actually identify where a lot of these tectonic structures exist. So obviously the west coast of North and South America is a prime example of where a lot of these porphyry systems exist. Some jurisdictions are more difficult to operate in than others. And you know, I really want to emphasize this, and Mark, I'm sure you know you've experienced this in the years that you've been covering the industry. There is no perfect jurisdiction. That doesn't exist in our business. What you really need to do is sit down and understand, how does one operate here? And if the rule of law works and you can operate there, then that is a tremendously valuable opportunity. But that's going to be a different answer for different companies, because different companies have different skill sets. They have different teams. So what we like to really leverage within our company is the experience that we have in exploration in the epithermal and porphyry systems, and then to leverage that experience into new jurisdictions.
The next question is asking about Borsco. Now that the project is at a proportionate funding stage, how do you move forward and fund?
Yeah, that's a fantastic question. And I'm just going to move to that slide here. So this particular opportunity we think is quite rare. It's pretty rare to find a land position that is within 5 kilometers of, you know, let's call it a world-class structure that has created these, you know, close to 4 billion tons of porphyries. So as we've explained, we're not a group that does a lot of the heavy lifting in terms of the expenditures ourselves. We really do look for partners. We do have a proportionate spend with JOGMEC, meaning, you know, we're at 51%, so we do have majority interest, and JOGMEC has 49%. And what we've basically decided is that we've opened this up as an opportunity for another partner to come in. And so we have been signing CAs and having discussions with groups that are interested in this kind of exploration. It's not for everyone. It's certainly not for another junior. It really is an asset for another major.
Then another question is asking, have any of your projects ever resulted in a royalty?
Yeah, so all of our projects that are currently in agreements with our partners all result in royalties. So that's already built in and negotiated in every contract we have. So it's not that in the future we would negotiate a royalty on our asset. That has already been negotiated. It's 2%.
But just to follow on to that, not every one of them will likely result in a royalty. That's kind of the whole purpose, is to get there. So with that, you might talk a little bit about how the elements of the revenue are structured in terms of the operator fees and option payments, and kind of how you manage that volatility, since you may have a portfolio of agreements.
Yeah, I'm going to switch back to this slide here, which is slide 5. So everything ends up in a royalty, and you're right, and that's dependent on exploration success. And as you know, not every royalty, even for operating assets, ends up paying out. So it's really about the quality of the assets that have that royalty. That's, I think, an important distinction. Operator fees are for us to operate on behalf of our partners. Option fees are cash payments to the company. Basically, they run on calendar years, so those are mandatory. Advance royalty payments are also mandatory, and they also run based on a calendar. And milestone payments are based on the success of the asset. So, and those are significantly higher payments. So our milestone payments would amount to about $9 million US on advancing one of these projects. And again, that starts with the initial resource and ends with commercial production. So by having multiple projects and having more than one partner, that is the way that we manage that volatility of, if a program is moving forward with one partner in 1 year versus another partner who might put it on hold because of other priorities. So the portfolio approach is the best way to manage risk.
The next question coming in is, could you talk about the grades seen at the mines near your properties, open pit or underground? What is the scale of those mines?
Yeah, so for example, the Bor deposit is an underground operation. The Veliki Krveli mine is an open pit, and so is Majdanpek. And Čukaru is envisioned as an underground operation. And basically what you see here for Majdanpek, the published data shows that their grade is 0.3% copper, 0.27 grams per ton gold. It is an operating mine. It does have fantastic infrastructure around it, and so it is a profitable operation. Veliki Krveli is 0.37% copper, 0.07 grams per ton gold, and again, that's reflective of the fact that the operation is already currently operating. This is pretty similar to what you see grades in established operations in Chile. And I think what's really important is that as new assets get developed in this region, there is a real distinction between what is open pit grade and what is underground grade. So for example, with Čukaru, their porphyry system is 0.86% copper and 0.18 grams per ton gold. And you can see that that's, a significantly higher resource grade than, for example, the open pits. And that's because you have to justify the underground investment in order to get to that resource. The upper zone, which is really a classic high sulfidation epithermal system, that's 3% copper and 1.9 grams per ton gold. So there is a real variation in resource grade depending on the type of deposit and, of course, depending on what type of mining method is economic for that type of grade. One of the things that we think is really important to highlight for this region of the Tethyan belt, and whether it's Serbia or Bulgaria, is the infrastructure. So if you're going to make a discovery, for example, in the Borsko deposit at Target 1, to get that into production is a significantly lower capital investment than to get a similar system in the Andes into production, because your spend for infrastructure tends to be around a quarter to a third of your capital investment. And so when that's already made for you, it makes the whole economics of these resources much more attractive, or you can go down to different thresholds.
The next question is, could you talk a little bit about your strategic alliance with Geographic and your generative program in Bulgaria?
Of course. I'm going to move to this slide here, which kind of shows the regional picture. So we do have that generative alliance with Geographic, which concluded at the end of last year, or around the middle of last year. It basically identified a number of copper projects for Geographic. We have designated a few of those and have made applications. And so as those churn into established contracts to be able to start exploring, those would be more assets that Mundoro can generate further revenue from. And again, another opportunity for our investors to participate in more copper discoveries in the region.
And the next question is, you have one project available for option. I believe that referring to Zeleznik. Will you grow your portfolio of available for option projects?
Yes. We have made certain applications, like I said, actually in both jurisdictions, in Serbia and Bulgaria, and that is really what's going to grow the pipeline for further opportunities for partnering.
Then the next question is asking about your funding and capital needs over the next 12 months.
Okay, I'm just going to switch over to the slide 10, which basically shows our current capital structure. So we do have 1.9 million in cash as of the end of the third quarter, and we think that'll be very similar to where we'll end up at the end of the fourth quarter. So we're not in immediate need of cash. We always go to our shareholders first in order to raise any capital. And if there is still further need, we would go out to the broader investors investor base for further capital. It's always important to have a good treasury so that you can take advantage of unique opportunities to acquire more ground and assets. And that's primarily what we raise capital for, of course, certain working capital. But generally, this type of strategy doesn't take the traditional $5 or $10 million type of raise that you'll see in other junior equities. It's really small raises of usually about less than $1 million to maximum about $2 million.
And I think the last question is really asking about political and regulatory risk in Serbia and Bulgaria. And I think what I'll add on to that is I'm not sure that Serbia was ranked last year in the Fraser survey. I know Bulgaria was 25th. So perhaps, to maybe also speak to kind of the strong points. I mean, obviously there's a lot of infrastructure there, but, kind of hit on maybe some of the differences between the two, but what they excel at and maybe what might still need some improvement.
It's a great question, and I always start this type of answer with there's no perfect jurisdiction. We know that there's plenty of complicated areas in North America to invest in. I think that so you're right. I think it requires a minimum of 5 responses in order to get ranked in the Fraser Institute. So when they don't have 5 companies that respond, a specific jurisdiction doesn't.
And that was just last year, and that was just based on investment attractiveness on that ranking.
Yeah. So I think that I think you kind of have to look at the prior ranking where people were responding to the survey. So they definitely, I think, rank well in Europe compared to most of the other kind of mineral destinations for investment dollars. The primary difference between the two countries, Bulgaria is in the European Union. They have a very different type of economy than Serbia. It's probably a bit more diversified, and so they don't need resource investment in the same way. But having said that, Serbia is a candidate to get into the European Union. They've been working very hard on harmonizing their laws with the European Union in order for, be prepared for that ultimate accession into the Union. I think that it's one of those governments that has always been very responsive to industry. They've always taken a very methodical approach. I think that's why you've seen the mineral industry grow significantly faster in Serbia than you have in Bulgaria. But the rule of law in both countries is, from our experience, generally the same. They do have slightly different tenure rules. So, one jurisdiction is more administratively heavy than the other. But generally, we find that it's has been fine for us to operate in these jurisdictions. And assuming that the governments continue to see natural resources an important part of their industry, general economy, then, you should see continued investment in the sectors.
Well, Theo, I think that's about all the time we have. We thank you so much for joining us.
Great. Thank you very much for having Mundoro. I really appreciate the opportunity to be able to introduce our company to your network.